Good evening. Thanks for joining us on India Business Hour. I'm Shereen Bhan. The headlines we're tracking for you tonight. India is set to beat China to become the world's most populous nation by the middle of 2023. According to the United Nations, India's population is estimated to reach nearly 1.43 billion people. India and China could account for one-third of the world's total population. The report mentions a majority of Indians suffer from population anxiety. Data for March points to a slowdown in the pace of new demat account openings. Over 33 lakh accounts have also gone dormant in the last 1 year. But the F&O market appears to be the new flavour of the season. Retail turnover in the F&O segment up 114% over last year, even as the retail cash market volumes drop. Tech firms resort to more layoffs. Facebook parent Meta to begin fresh round of job cuts. It had announced in March. Amazon lets go of several employees in its advertising unit as part of the 9,000 job cuts announced earlier this year. JLR unveils a plan to invest £15 billion over the next 5 years to accelerate the EV business. Makes its Halewood plant in UK into an all-electric manufacturing facility. JLR says its next-generation medium-sized luxury SUV architecture will also be fully electric. Adds first all-electric Range Rover will hit the roads in 2025. The government is not in favour of extending the subsidy scheme for EV companies beyond March 2024. A final decision has not been taken yet. EV subsidies to the tune of 1,200 crore rupees have been on hold for more than 13 EV players for close to a year now. Supreme Court continues hearing pleas seeking legal status for same-sex marriages. The court observes that the centre has shared no data to indicate that these appeals are in fact an urban phenomena, as the government cannot discriminate based on characteristics over which an individual has no control. The centre urges the court to also make states party to the case. Netflix reports a mixed bag. Revenue slips below expectations. Earnings per share meets the street. The OTT giant's India engagement up 30% year-on-year. Netflix had cut its subscription prices for India by 20 to 60% in December of 2021. American broadcaster Fox News settles a defamation suit with Dominion Voting Systems for more than $700 million. Dominion claims Fox News aired false information about the company's voting machines during the 2020 U.S. presidential elections. This is one of the largest defamation cases in U.S. history. Karnataka Chief Minister Bommai files his nomination from Shigaon. Popular Kannada film actor Kicha Sudeep accompanies him as the BJP holds a massive roadshow. Well, market action of the day. Another volatile session where the Sensex and the Nifty ended in the red. Mid-caps and bank stocks fell in line with the blue chips. Metals gained today, though, with that index rising 0.5%, while IT and media stocks fell sharply today. BSE companies have erased a market cap of 74,000 crore rupees in today's trading session. While staying with the markets, lackluster returns have led to a slowdown in demat account additions. March data suggests that retail investors are now shifting focus to futures and options from the cash market. Surabhi decodes the numbers for us. An F&O frenzy, Surabhi, or so it seems.
Well, March data from the exchanges and depositories is throwing up some pretty interesting investor behavior trends. First of all, the trend of new demat account openings is slowing down. Now, though the total number of demat accounts continues to rise at an absolute basis, the incremental new account addition is what is seeing that drop. March actually saw 19 lakh new demat accounts being opened as opposed to 21 new lakh accounts being opened in February. In fact, this trend, you can say the decline has started in January after having a decent end to the year. The number is also well below the monthly average of 29 lakh new demat account openings that we saw throughout FY22. So if you average out every month of FY22, then we were at 29 lakhs. That number for March is down to 19 lakhs. So that tells you about the pace of the decline. Now, lackluster markets are probably the key reason behind this drop in fresh demat account openings. And that could also be the factor behind the steady decline seen in NSE's total active client base, which has been falling for 9 consecutive months, according to Motilal Oswal, and it's come down to 326 lakh accounts in March. Now, mind you, even though the number of NSE active clients is almost down 9.5% in March of 23 versus last year, discount brokers aren't complaining. Their dominance actually has been growing steadily throughout the last 1 year, with the top 5, that is Zerodha, Upstocks, Angel One, Grow and 5 Paisa Capital making up now for 60% of the market share. Let's come to another interesting trend, and this is retail investors, or should I maybe say retail traders, increasing their interest in the futures and options market. Let's look at the basic turnover trends to begin with. Now, despite the market remaining absolutely flat over the last 18 months, average turnover has been pretty healthy. In fact, it's up from 95 lakh crores in March of 22 all the way up to 236 lakhs crores. That's almost 150% jump in that 1 year period. Now, this is largely courtesy the rise in F&O volumes. Let's look at the average daily turnover in the F&O segment, which is up in March 148% over last year, and it's a 13% increase compared to February 23. It's not just seasoned traders, but retail has also decided that it doesn't want to miss out on the F&O opportunity. Motilal Oswal points out that retail segment average daily turnover has grown about 12.5% in March over February, the month-on-month growth if you're talking about Feb 23 and March 23. But the more stunning comparison is on a year-on-year basis. If you look at the average daily turnover in the F&O segment, retail turnover, then we're talking about a massive jump. From a level of 40 lakh crores in March 22, that number has moved up to 87 lakh crores in March 23. Contrast this with the cash market activity, and cash market retail volumes have actually dropped in the same period, the year period, by a little over 28%, and they've come in at about 237 lakh crores. So there we have it. It's quite clear that the retail investor is willing to experiment with newer ways of making money and is perhaps heading from the cash to the futures and options market.
Surabhi, many thanks for joining us. Now, India is expected to overtake China to become the world's most populous nation by the middle of 2023. This, as per the latest report by the United Nations. India's population is estimated to reach nearly 1.43 billion people. Now, the report also says that India and China could account for 1/3 of the world's total population. The UN report also highlights the phenomena of population anxiety, which it says has seeped into the minds of majority of Indians. Archana standing by now to take us through the details. Archana, the UN laying emphasis on population anxiety.
Well, thank you for that. Are there too many people in the world? Are there too few people in the world? Is the population growing too fast or too slow? The UN report says that the world is asking all the wrong questions. The most important takeaway from the United Nations Population Fund report was its emphasis on population anxiety and how it is eroding women's rights. Now, population anxieties have seeped into many Indians, with about 63% of those surveyed identifying various economic issues as the top concern in terms of change in population. With 8 billion people on this planet, the UN report acknowledges that there are concerns around depleting resources, food needs, ability to invest in children, and stress on the environment. Whereas on the other hand, more and more countries are facing decreasing population, which is stoking worries of a declining workforce, a dependent aging population, and stress on pension funds. The report also says that the governments are increasingly adopting policies aimed at raising, lowering, or maintaining fertility rates as a result of population anxiety. However, the growing number of population of people should not trigger anxiety or create an alarm. The UN report says that population anxiety will distract us from serious problems and deny the rights and bodily autonomy of women and girls. The burden of this anxiety largely falls on women. A staggering 44% of women and girls in 68 countries do not have the right to make informed decisions about their bodies when it comes to having sex, using contraception, and seeking health care. And an estimated 257 million women worldwide have an unmet need for safe, reliable contraception. The report asserts that women's bodies should not be held captive to population targets. The report strongly recommends that aging countries partner with young and high fertile countries to support economic migration. Policies like parental leave programs, child tax credits, policies that promote gender equality in the workplace, and universal access to sexual and reproductive health and rights. Back to you.
Archana, many thanks for joining us. Some important aspects there of what this population anxiety could lead to and what nations need to consider. India likely to overtake China in 2023 itself as the world's most populous nation. Now, Meta employees are staring at layoff Wednesday. The tech giant is likely to implement a fresh round of job cuts, the one that the tech giant had announced in March. Now, this will be the second round of job cuts after close to 11,000 employees had been fired, which was in November. Kanishka joins us now with more. Kanishka, what will this mean for Indian employees of Meta?
Right. My colleague Nishtha Pandey and I have picked up from multiple people in the know that Meta is going to begin its latest round of job cuts starting as early as today. Though CNBC-TV18 is awaiting an official confirmation from Meta and inputs on the detailed impact, several employees have told us that the buzz about April 19 is being called the D-Day. Another source has said that employees at mid-senior levels will be notified about layoffs this week, while those in leadership roles could face the axe next week. The Washington Post has also seen an internal memo by the HR head informing about the job cuts. However, employees in India tell us that they have not received any official communication so far. According to the Washington Post, divisions that will be affected include teams working on Facebook, WhatsApp, Messenger, Instagram, and the virtual reality division, Reality Labs, among others. It must be noted that last month, Mark Zuckerberg had announced that Meta would implement another 10,000 job cuts after it laid off 11,000 employees, or 13% of the company's workforce in 2022.
Kanishka, many thanks for joining us. And from Meta to layoffs at Amazon, e-commerce giant Amazon is also consolidating its workforce further to reduce costs. Now, the company has fired several employees from its advertisement team in a fresh round of layoffs. This is part of the 9,000 job cuts that Amazon had announced in March. It had already fired 18,000 employees in November and January. Disney also plans to hand out pink slips. Disney is expected to lay off thousands of employees starting next week, including 15% from the entertainment division. As per Bloomberg, the layoffs will impact those who work in the TV and film business as well as those at theme parks and corporate positions. The company cut 7,000 jobs in March as part of its cost-cutting measures. The big global earnings, Netflix reporting a mixed bag in the March quarter. The company's revenue coming in below expectations, even as the earnings per share met street expectations. This has prompted Netflix to delay the rollout of its password-sharing crackdown plan. The OTT giant's India engagement up 30% year-on-year on the back of the price cuts announced. Air India has revamped the salary structure for its pilots and cabin crew, but that doesn't seem to have gone down well. The Indian Commercial Pilots Association and the Indian Pilots Guild, the two unions, have asked members to not accept or sign the revised terms and conditions, saying that the terms are unfair. India has increased guaranteed flying allowance to 40 hours, which the pilots say is lower than the industry standards of 70 hours of guaranteed allowance. So this is going to be something that Air India's management will need to navigate carefully. Tata Motors' own luxury car maker JLR has unveiled a 5-year plan to electrify its fleet. The company plans to invest £15 billion over the next 5 years to accelerate the EV transition. JLR aims to launch its first all-electric Range Rover in 2025. Sanjay Suri joins us now with more. Sanjay, take us through the EV plan that JLR has just announced.
JLR has spelled out its reimagined strategy for the next several years, and it's pointing the way of all electric, all luxury, very green, very clean. The company plans to invest £15 billion over the next 5 years in electric propulsion, with plans eventually to go carbon neutral by 2039. The Range Rover is due to go all electric pretty soon. The company is taking orders from as early as autumn this year for an all-electric Range Rover to go on the streets in 2025. The engine plant at Wolverhampton is switching to electric propulsion production, and JLR clearly is headed the way of sourcing battery packs and cells through the Tata plant due to be built in Europe. Sales from Britain alone have topped £12 billion a year currently and growing steadily. The company is planning to build on that in a luxurious sort of way. The company is sticking to the high end, none of those rough and ready Land Rovers of the old kind. By way of design, the company is headed the way of simple, clean lines, keeping it light, no crowded buttons. That matters for looks, of course, but it matters for battery life. JLR is working on a 700-kilometer range for the 2025 Range Rover with a 320-kilometer charge in 15 minutes. JLR clearly plans to lead the change in this fast-changing world of driving.
Sanjay Suri, many thanks for joining us. And speaking of electric vehicles, from the UK back home, the Indian government is not in favour of extending the EV subsidy scheme, that's FAME 2, beyond March 2024. However, a final decision has not yet been taken. EV subsidies to the tune of 1,200 crore rupees have now been on hold for more than 13 EV players for close to a year now. But this is a separate matter. It's on account of what the government believes are violations of the FAME policy. Parikshit is standing by with more on the multiple challenges confronting the EV sector. Parikshit.
Top government sources telling us there is no proposal under consideration as of now to extend the FAME subsidy scheme beyond March 2024. A final decision is awaited. At the same time, EV subsidies to the tune of 1,200 crores have been on hold for more than a year now, and this is leading to a shortfall in sales. So where do things stand as of now? In the month of March, Hero Electric and Okinawa have seen a drop in sales in the range of 48% on a year-on-year basis, and certain others have seen a 42% drop in sales. Industry body SMEV says there has been a 25% shortfall in targets since the festive season last year. One of the reasons for this is that subsidies for 13 companies have been on hold since May last year due to a probe relating to alleged misappropriation of subsidies. Subsidies to the tune of 1,200 crores have been on hold. Now, the SMEV industry body says subsidies are on hold for companies representing at least 95% of the market. And subsidies for 4 other EV companies like TVS, Ola, Ather, Hero MotoCorp have been on hold since March this year, pending inquiry into complaints of subsidies being availed on products costing more than the eligibility limit of 1.5 lakhs as per the FAME scheme. Now, all these 4 companies are in touch with the government. Ather, for one, has slashed prices of its top variant to 1.45 lakhs to meet the FAME criteria. Industry sources say if subsidies continue to be on hold, then there could be a demand softening and drop in sales as well. But here's what could really impact the industry, and that is the government saying there is no proposal as of now to extend the FAME scheme beyond March 2024. A final decision, however, is awaited.
Well, time for us to head into a break, but when we return, Cadbury initiates legal action against a social media influencer for posting a video that calls out Bonvita for high sugar content. More when we return.
Blue, red, yellow.
स्मार्ट डीजे
अरे यार, अगर हर महीने इंटरेस्ट मिलता रहे तो हर महीने कुछ इंटरेस्टिंग होना चाहिए कि नहीं? क्योंकि मेरा बैंक जो है वो मेरी तरह तुम्हारी तरह है, यंग एंड फ्रेंडली।
57 insurance companies operate in India. 20 companies have applied for an insurance license, but insurance players believe there is space to accommodate at least 1,000 more. Anshul and Arundhati Ramanan report that new players alone may not be enough and that digitization and measures to increase the acceptance and the need for an insurance policy may prove to be crucial.
India. It's the 5th largest economy in the world and the 2nd most populous. But its general insurance sector is the 14th largest in the world, according to IRDAI's annual report in December 2022. And its life insurance market ranks at number 9. Of the 55 companies that were operational in India at the end of 2022, 24 are in the life insurance business and 31 are in general insurance. And experts say these together service just a fraction of India's population, meaning there's a huge opportunity out there. The insurance regulator is currently evaluating 20 license applications from entities that want to set up their own insurance businesses, but insurance industry experts say even having 75 insurance players will not move the needle much.
India has close to 57, 60 insurance companies. If you look at US, it has 6,000 insurance companies. Now, if you look at a country like Taiwan, it will also have about 300, 400 insurance companies. So fundamentally, I think India should have at least about 1,000 insurance companies.
India's insurance penetration, which is the ratio of premium collected to GDP, has risen over the years. As per the Economic Survey 2022 to 2023, penetration has grown from 2.7% in 2000 to 4.2% in 2020, before dipping to 3.2% in 2021. Premium collections have been rising as well, above the global average. Adjusted for inflation, life insurance premium increased 8.5% in 2021 against 4.5% globally, and premium collections by the non-life insurance sector grew 5.8%, registered a 2.6% growth. There has also been a shift in insurance demand after the pandemic, with demand for health insurance rising more than any other product. General insurance companies say that as the economy recovers, there's scope for greater penetration across categories.
In India, about 10 crore people go below poverty line every year because of expenses on healthcare. To get 10 crore people above poverty line, it costs you 1.2% GDP. So insurance penetration and every Indian getting insured is critical for the country. If you look at developed countries, you will see that insurance penetration is very high for them. Or a simple thing like health, everybody would be having some kind of health insurance. Look at even home insurance, let's say a country like US has 95% penetration. India has less than 1%.
Experts say government aid will be crucial in driving this growth, especially with insurance costs slated to rise significantly over the coming years.
The most important factor, experts agree, is change in mindset. As the economic survey points out, most policyholders in India buy saving product more than they buy the protection-based one. It is this approach that the government's new income tax regime aims to de-incentivizing. But that also means insurance companies will have to do a lot more to expand the market. The mandate to dematerialize the insurance policies by the end of 2023, which means less paperwork, and setting up a Bima Sugam, an online portal to streamline the insurance process, will definitely help in the process. In New Delhi, Anshul.
Now, the Tata Group has approached the competition regulator for a merger between Air India and Vistara. Post the merger, Tata Sons Private Limited will hold 51% stake. SIA will hold a minority stake of 25% in the merged entity. Well, we continue to track the big story. Apple CEO Tim Cook met Prime Minister Narendra Modi in Delhi. In a tweet, Cook said the company is committed to growing and investing across India. Colleague Ashmit Kumar has been tracking Tim Cook's meetings with government officials, and he joins us now with more.
Well, what sources are telling us is that Apple, which has had a hectic last 5 to 7 days, is in fact quite confident about its plans going forward. In fact, over the last 2 years, we understand that 1 lakh jobs have been created by Apple. That's as far as manufacturing itself is concerned. And Apple is quite confident, is quite bullish that this figure can be doubled in a very near time frame. Not just that, Apple, what sources tell us is that Apple is broadly cognizant of the support that has been extended by the government and is in fact seeking for continued support from the government, especially as far as manufacturing electronics in India are concerned. So that is clearly a focus area for Apple. Meanwhile, in terms of areas that need more work, Apple believes, sources tell us, that there is a need for continued policy stability required in terms of the electronics industry. Not just that, Apple also believes that there's continued support required to bring the component ecosystem to the country. Keep in mind that of the 120 component suppliers to Apple, only 12 call India home. Further, Apple, in terms of areas that need more work, feels that there is more support perhaps needed from the government in terms of skilling. And finally, in terms of its plans ahead, there is a fair bit of focus on R&D as well. There's an accelerator that Apple will be setting up in Bangalore for training app developers.
Ashmit, many thanks for joining us. Bonvita has been a mainstay of almost every house with a child for a couple of generations, with even a few adults staying loyal to the brand. But that malt-based drink is now at the centre of a controversy. A social media influencer has called out the high sugar content in Bonvita. Shilpa Ranipeta reports that while companies that make malt-based drinks continue to claim health benefits of their products, experts say it is time for stricter regulation.
Bonvita, Horlicks, Boost, Complan. These are just a few of the malt-based drinks that make up India's 11,000 crore rupee malt-based drinks market, and they've been a cornerstone of a child's diet in most Indian households for generations. Social media influencer Revant Himmat Singha has churned up a storm with this industry at the center by challenging the health claims made by Mondelez's Bonvita. He suggested that it had high sugar content. While Himmat Singha eventually deleted the video after it received a legal notice from Mondelez, the topic has taken a life of its own on social media. Nutritionists, doctors and consumers have joined the conversation, with many questioning the actual health benefits of such drinks. Many experts claim the high sugar content in these drinks is not healthy, especially for children. Bonvita, for instance, contains 37 grams of sugar per 100 grams. Complan has 21.8 grams of sugar, Boost 9.5 grams, and Horlicks 13.5 grams.
Sugar of this product is very high, actually. Nearly half of it is sugar. But I'm more emphasizing on the fact that when you're saying we are giving you a health product, this, to my mind, is misleading, where they attract children and parents to buy this product, and this is misleading.
Mondelez dismissed Himmat Singha's claims, saying his video made false and negative inferences about Bournvita's safety and efficacy. The company said, and I quote, "All our claims are verified and transparent, and all ingredients have regulatory approvals. All the necessary nutritional information is mentioned on the pack for consumers to make informed choices. Every serve of 20 grams of Bournvita has 7.5 grams of added sugar, which is approximately 1.5 teaspoons. This is much less than the daily recommended intake limits of sugar for children. Bournvita contains nutrients, namely vitamin A, C, D, B12, iron, zinc, copper, and selenium, which supports the immune system." End quote. Hindustan Unilever, which sells Horlicks and Boost, says, and I quote again, "We are conscious of our responsibilities towards consumers and are committed to providing safe and quality products that adhere to Unilever's highest nutritional standards. We use sugar responsibly whilst matching technical needs and consumer preferences." End quote. But some experts are still not sold on these health benefits.
Most of these health drinks that we speak about, like all the brands, have added sugars in somewhere or the other. So none of these are going to actually improve health of the child. It will, yes, increase the palatability of milk. Whenever you look at a health drink or anything that says that fortified with zinc, fortified with so-and-so, does it actually take care of the recommended daily requirement of that particular micronutrient in the child? Generally, no.
They say it's time India brings in regulations to control ingredient levels and also ensure adequate disclosures.
There needs to be a definition of what is an unhealthy food, and that should be barred from advertising. There should be a definition of unhealthy food that should have a label on the front of the pack that this is unhealthy because it is high in sugar, salt, or fat, or being ultra processed. So thirdly, there could be higher taxes. There are so many other things which can be done.
Currently, India has no official prescribed limits for items like sugar, fats, sodium, etc. But the food regulator FSSAI's draft regulations for front-of-pack labeling prescribes foods that are high in sugar, sodium, fats to come with warning labels prominently in the front of the pack. However, these draft regulations are yet to come into effect. In Mumbai, Shilpa Ranipeta.
And that is it on this edition of India Business Hour. Thanks very much for watching. Do stay tuned. The news continues here on CNBC TV18.